Hi, everyone. My name is Elaine. I manage the crypto partnerships here at OKCoin. OKCoin has recently made its first venture into the world of DeFi, and we want to make sure we're giving our community every resource we can to allow you to participate in the new financial system we're building. As part of that, we're talking to members of our community to get their takes and opinions on favorite assets and where DeFi is going. Today, I have Justin Wu with us. He's a growth marketer working within the blockchain space. Justin, why don't you give a little self-intro?
Awesome. Yeah, I'm a growth marketer in the space. I've helped and hosted, I guess, the first Seattle blockchain conference here called Blockchain Northwest here in Seattle. Also helped a lot in the blockchain gaming space with NFTs, with cool projects such as Matic Network, cards, Gods Unchained, and a few other card games, and also helped kind of launch the first blockchain gaming stage inside of E3 when there was a conference, when conferences were a thing back in COVID. So, my goals has just been to kind of learn what's going on in the space. Obviously, been seeing a lot of different trends was going on. NFTs keep coming back and forth. DeFi just started taking a real surge. And the market's always been shifting, and it's always a moving target. And my goal is to understand what's happening currently, and how communities, growth, marketing, and brands will kind of adapt with what's going to come in the future as well too. But super hard to predict what's going on.
Yeah, that's really interesting. I actually didn't know that you had like a strong gaming background. When we first talked, you referred to yourself as someone who's been involved in the blockchain space for a long time. And I think, there's always that conversation around blockchain and crypto and kind of like the evolution towards DeFi. Can you give us a little sense on how you first found out about DeFi and what that trajectory was from like gaming, NFTs, blockchain, and then now into DeFi?
Yeah, definitely. So when I first heard about DeFi, it was probably about sometime last year when we started taking a look at projects like Compound come into place. Stable coins, I think a lot of them were talking about this idea of DeFi or decentralized finance, the ability to essentially cut the middleman or middle banks or middleman systems out there of these centralized systems or centralized exchanges. And I think that we saw even back in like 2017 or like 16, like the early days of like the ICO phase, we saw the DEXs out there, the decentralized exchanges, and that was even also like an early taste of DeFi, and that's where like I've kind of heard about DeFi DEX, and I think that still was not like the full clear definition of it, and people are still experimenting with the idea of DeFi or decentralized finance. But to me, like if we think about decentralized finance and what it really means, it is obviously it's a pretty big nebulous term for a lot of people. The most important thing that I would say in terms of the features and things, a definition of decentralized finance is just taking a look at any of the financial systems out there or fintechs, and adding the decentralized layer where you can kind of cut out, again, like the middle party for banking, loans, lending, insurance, all those different aspects that's out there, and make it decentralized, but also incentivized and utilized by a massive network that is living, breathing on its own and doesn't require anybody to maintain it and accept the community, and it can't be shut down. Which is those are like the flavors of DeFi. But to me, again, it's just like taking things from the finance world, old school financial systems, and try to upgrade them. If it is an upgrade, I don't think everything is always an upgrade. For some of the fintechs, adding decentralization isn't always an upgrade, depending on the perspective and depending on the features as well too. So I'd say that's how I would kind of explain it to somebody who's looking at it is taking a look at existing system. How can we like turn it on its head and see how this experiment works? And I say experiment because it's all experimental.
So if I'm hearing you correctly, right? So DeFi to you means taking out that centralized aspect of the existing financial structure. So moving those financial behaviors, and kind of the relationship between users and the financial system, and moving it on to a decentralized platform. Is that kind of a good way to describe what DeFi means to you?
Yeah, yeah, and the hope for DeFi is if by moving central party, it's, hopefully it does provide more benefits, such as allowing people to be their own bank, gain greater interest or APY yields, or a lot of different, or just send money throughout the world with no middle central party out there. So those are all different aspects to kind of take a look at, like kind of old versus new financial systems out there.
Gotcha. And I think one thing, that you said that kind of piqued my interest was your take on how removing a centralized layer could also open up, new benefits or even new behavior for users, right? So can you talk to me a little bit more about how you think DeFi will affect the world, or maybe change kind of our own relationship with money or the banking system?
Yeah, I think it's always going to be a push and pull, especially if regulation is going to try to tackle this beast of if decentralization is even enough of an excuse to protect you from a platform or dApp that you build. And I'm not sure, I'm not a legal lawyer or anything, but we saw with even like the Silk Road, you build your own centralized like marketplace. That's still not going to stop the old school systems or regulations to try to stop what you're doing, especially if it's super disruptive. So I think that there's different layers to it. First is just kind of replacing the old behaviors and just upgrading with new features. So it's just like, again, like if we can allow people to be their own banks, get some decentralized loans, then they're not dependent on someone to underwrite or take advantage of their own credit score. As long as they have collateral to put up for a loan, they can get it without discrimination, and they can get it fast and settled in a short amount of time, compared to you just like waiting for like a quick payday loan or anything that's out there that could be even predatory out there too. And then also too, there's not a benefit that if you help provide liquidity or are part of that network that helps provides those loans, you don't get any benefits unless you are part of the company. Now, so it's kind of democratizing that access to different people around the world, and you don't necessarily permissionless in a way that as long as you are good for it in terms of collateral, then you can do what you need to in terms of your transactions financially. And then you got like the super experimental ideas where people are trying to play around with different concepts, whether it be like, the algorithmic based stable coins to lending, and just creating all these different like ideas and concepts that haven't been like fully invented yet. And those are still kind of like uncharted territories. And I think that they're going to be very disruptive, but we're going to see a lot of code breaking and a lot of money being potentially lost because of it. And it's just not tried and true. Whereas if you were just to like replicate and replace some of the just old school like finance and fintechs, then there's already proven formula. There's a kind of somewhat regulations around that, and then also too like the user flow or the customer flow from customer experience flow from like just doing banking or remittance, except moving on to DeFi, is a normal user behavior. Whereas if you try to create new behavior, it's going to be very experimental, or it could be just like what I call like very DeFi, or like a DeFi rabbit hole where it's only on the frontier edge where developers or very heavily crypto people that understand like all the different mechanics would take advantage of, and that's not going to be accessible for the everyday person and user, which I think that's what we're forgetting, especially when it comes to DeFi, is DeFi, if you look at the numbers, it's like really small compared to the overall crypto space.
Yeah.
Like 10 billion 10 billion total value locked maximum, and then we have about like 300 billion plus. I haven't checked the market cap today overall of crypto. That's still super small, and that still 10 billion is not even a dent in the whole real world of finance overall. And so it's like, if we wanted DeFi to be this killer app, like we haven't achieved it yet because of cheap mass adoption. And I don't believe that we can do there by creating very experimental systems that doesn't easily integrate or provide that bridge to allow people to move their assets from a traditional bank over to DeFi.
Right.
So until we get there, I think that I think that that's a bridge that we still need to build and cross as well too.
Definitely. Before we dig deeper,
everybody's still focusing on,
Oh no, go ahead. Sorry, I didn't mean to cut you off.
Oh no, you're good.
Before we dig deeper into what you feel like that bridge is, in terms of what other opportunities DeFi needs to hit, and I do want to dig deeper in a second. I want to talk a little bit more about kind of what DeFi has shown us already. And one of the things that I've thought a lot about as I've seen kind of the space mature in the last couple of months, really kind of blossom, I would say, is an interesting balance between incentivization structures and the democratization of kind of access, right? I think what you're seeing in a lot of these DeFi protocols is that it has a really strong and articulated incentive structure, right? Whether you look at liquidity pools or yield farming, or even kind of the benefits that lending protocols are giving you, right? They're all incentive based. And then you couple that with an increase in, let's say, like DEX governance tokens, or from a more organizational standpoint, kind of the tokenization of participation, right? Kind of given your background as someone who's been trying to get more users into crypto and blockchain in general, what's your take on kind of this balance between incentives and governance or democratization of access?
I'd say it's fair. We're seeing, even this past week, there's been a lot of new DeFi projects out there that are testing like incentivization or even just like really low supply now to try to copy with like how Yearn started, like the low supply tokens. And then people are experimenting with burning tokens, trying to inflate. Like there's like a lot of really cool ideas that's been happening, but I still haven't seen like a model that's super sustainable in terms of like what makes people want to actually hold the governance tokens. Because if you look at like even like all the stats and numbers, besides people wanting to trade and speculating it, a lot of people are just, once they farm the governance token, they are kind of unloading it and just selling it off back into the market, and the prices are just being suppressed from it. And that means that these governance tokens aren't having as much utility despite the speculation or just like voting. So I think that there needs to be more utility from these different governance tokens and platforms to provide those incentives to stay within the network. And I think this is even proven by the community members in DeFi, like their fickleness to, or just like their inability to stay loyal to even just a brand. We see like money move like left and right, like in terms of like, you can see it through the total value locked of people just coming in and out and moving a ton of money. And so loyalty is just, and retention, especially on the marketing and on the DApp retention side is still not like 100% fair, except, with like the bigger like Uni and other projects that are still handling all the swaps right now. But so people are kind of like coming in and out. And so like these incentivized structures were, I think, a lot of them are really good to start. And it's a little bit challenging because from witnessing and even participating in several DeFi launches, you have to create the incentives for every single party, and you might have to create incentives for different stages of the launch of the DeFi protocol, right? Like obviously, if you want to bring in liquidity, then you're going to have to create incentives for like the early farmers and people to provide that liquidity. But then if you have too much, then they're going to tokens, then they're going to obviously, you know, the early farmers can then just dump it onto the next people and then just crash. And because the, you know, besides talking about price, but like if the confidence in the token isn't there, then it's going to be hard to scoop up from there, and you have to create more incentives to like maintain and sustain that, which is a challenge because everybody's just still experimenting where they got one part right, but they're trying to still getting the perfect system is still a challenge. So you know that's kind of my perspective on that. And then you know if these if any of the yields kind of slip or change, or because it's tied to like ETH in any way, and ETH, you know, slips as well too, then it does impact the market in its own way too. So and that's not even talking about the projects that are built off of the other projects, and they're just like either leveraging or we're just you know doing whatever their own experimentation on these other tokens on top of their own protocol as well too. Which I see, you know, I'm seeing like a lot of platforms like explore and try to do. It almost becomes like a house of cards.
Well, you know, you talked about loyalty, right? Like loyalty to different DeFi brands or different protocols or ecosystems. And I guess I just want to get your quick take on kind of the role of loyalty or kind of commitment to one asset, and the utility of kind of these assets as a form of currency, or kind of like DeFi as like DeFi's relationship to sound money, right? I think a lot of us got into this space because we felt like there were issues with the current system, and our belief in the fact that Bitcoin or crypto represent a new form of currency that you know, you can use with convenience, but also kind of have more control and sovereignty over value and wealth. And I guess I'm wondering, kind of that philosophy, is that in parallel with DeFi? Is that kind of counter to DeFi? What is your take on the relationship between those two concepts?
That's a really good question. My perspective, especially seeing what's happening in the space and looking at the DeFi traders, investors, and speculators in the space right now, is that I would classify with a few different buckets of types of users and people. So there's one that is what you just said. They're looking for alternatives to, you know, they want to be their own bank. They love the idea of decentralized finance and being able to just own their own assets, own their own keys, etc. And you know, it does provide. There is tools out there that provide a good percentage yield in terms of being able to just like store and lend your assets. But then you have like the whole other bucket of the DeFi industry, where they're not in it for they're not really in it for the decentralized finance features per se. They're just here to speculate and trade and just catch up because this is like the new latest hype. And, you know, they're just seeing these crazy moonshot in gains. And that's just kind of attracting more of the speculation and trading crowd. And with what these decentralized exchanges or these other AMM platforms has allowed it to is provide fast liquidity and fast trading and allow projects to kind of like launch and almost even fundraise at the same time. We're just seeing like this kind of a new hype cycle again from a very trade speculation crowd that's the front runner. And you know, that's how it was back then. And when I got into crypto too, during like the Dogecoin days in like 2013, 14, it was all the speculation. There was not much utility at all in the Bitcoin space, and they were still the front runners of bringing, you know, injecting a ton of capital and moving all around and still trying to find what this all means. And I think that we're still super early on in the space, and it's proven too that in terms of like loyalty in projects, it's like the founders of many of these projects are either anonymous, or if they're not anonymous, still like they're like not always committing to the project that they just launched. And you know that if the leaders of in this space and the people building the projects right now in DeFi aren't even staying with their own projects, and they're considered some of the top DeFi projects out there, then it's like, is there a sustainability and loyalty even from the people building it? And at that point, if they're not, then people are just jumping around, and they're going to want to look for the next token or project that's out there by the same creator, because they just want to come in for the gains and profits, which is, you know, unfortunate. But you know, this is what, you know, we already saw this though with like, again, like the whole space where like dexes and decentralized wallets was a thing, and then it had some utility, then it took a little pause, then a resurgence of this year with DeFi again, popping up with all these different alternative incentive models and governance as well too. Then it's still all experimentation, and I think that we're going to have to continue to find new killer dApps or systems that can actually provide and bring real utility to the platforms.
Yeah, I think I think that's a really astute observation, right? Like we are very much in the early stages of DeFi. And so I think we're seeing some of the growing pains, whether it's loyalty or kind of like uncertainty around what these protocols are actually doing or stuff like that. So I think that's really accurate. I want to go back to your point on you know, the fact that maybe maybe DeFi is being built on a house of cards, or that bridge between connecting DeFi to true like mainstream adoption or usage. You know, what do you think is lacking right now in the DeFi space? And then where do you think it needs to go in the future to make sure that it is something that's adopted, both in terms of like mainstream crypto, but also just outside of crypto?
Yeah, so I think it was kind of the main points that I was talking about earlier, is that I think that the utility of DeFi is still not quite there. It's like, despite like just going in and trying to farm and just going in and trying to get the high APYs, it's there's just not enough staking utility to allow people to transact and use. And I think that it's also like an infrastructure problem too, with like Ethereum not being scalable, and then the transaction fees is still like ridiculously high. So it's like doing like a simple small money send and transactions while DeFi is taking over the network is you know, you don't want to pay $5 to $10 just for a single transaction if the transaction size is even smaller, or just a fraction of that as well too. So I think that this was a good experiment, and I think that what we'll see as hopefully as the next iterations and waves comes, we're going to see other alternative chains that's outside of Ethereum try to crack into DeFi. Then we'll also see some layer 2 options as well that will try to help speed up and lower the transaction costs, and then that will then bring us to another level where we need to get to, because right now it's just not sustainable from just a pure user and utility and user experience perspective. It's still really bad, and the barriers are extremely high, and it's just costly to try to like make any moves and move your money around in the space. That just, I think, is inhibiting us to get to kind of like the next phase. And I think it's not something like that the DeFi products itself are going to be solving. I think they would have to work on trying to upgrading into, again, like a layer 2 options until like ETH2 comes. Layer 2 or these other chains like Neotron, etc., that are starting to get into DeFi.
Yeah, I'm really glad you brought up these other chains. I think, you know, I wanted to talk a bit about you know, kind of like the underlying mechanisms of DeFi. So I'm glad you brought that up. Talk to me a bit more about these other chains, right? There are a number of either specific blockchains like Tron or Neo that are getting into DeFi. But there are also chains that allow for the interoperability between these different chains, right? Whether it's like Cosmos or DOT or almost in some ways EOS, right? So talk to me about the kind of infrastructure of DeFi and kind of your take on whether A, we need new chains that support DeFi, and B, kind of your take on the chains that can connect the various different chains, like DOT or Cosmos.
Yeah, so this is a kind of a big topic, but essentially, we're seeing I think it's great that these other chains, even though they're just like kind of playing catch up and copy, each of these kind of their own protocols has their own user base that's kind of already transacting, or if they're not transacting, this will start to increase more transaction value for those different chains and products. And again, there's each of these different chains have their own unique competitive advantage and edge compared to Ethereum in its own way, with like some with low transaction fees or just being super fast, or being able to send to a name wallet as well too. There's a lot of different features for that, and I think that some of the projects in the past have kind of stalled for utility, and they're always trying to crack that by trying to becoming the gaming chain or an NFT chain, or they're trying to add the DeFi layer to it too. So they're just trying to build their own suite of a utility for their own platform, and I think that's great for the space because we need more transactions and value being used within each of those chains as well too, to then just grow the DeFi count and network. But obviously they're just playing catch up right now, so we're not going to see that in development in the next couple of years, I'd say, because they're just playing catch up, and there's still like the DeFi infrastructure that needs to be placed, like having their own version of Compound, or if Compound's going to integrate with their chain, be in place. But hopefully like Cosmos and DOT can kind of like connect the dots between these different protocols to allow that to happen. And then the other issue that's back down to is there like a MetaMask for other chains outside of Ethereum too, that needs to be developed, like a multi-chain wallet or a single chain MetaMask for growth. And these are just like very like infrastructure level basics that still needs to be set up in terms of foundations to then allow for the quick and easy use across the different platforms, chains, and projects. So I think that because we're not there yet, but I am feeling optimistic, and it's going to help the space overall, even though it's just going to catch up and just do a copycat of what's been happening with all the food tokens and others that are trying to just play around and sometimes take advantage of the space. But I think that still it's then bringing more excitement to each of those communities, transactions and use, that will then overall grow the space together. And sometimes there's going to be some really cool, innovative models that those developers and those communities will then start to do that maybe you can't do in these other chains and platforms. Or it could be replicated, and then everybody's going to learn and just feed off each other, especially if there's like a killer project that comes out in a new chain. Then a lot of people would want to like copy and model it after that, since everybody's just like forking and copying each other.
Yeah, it has been really interesting to see, well, a couple of trends. One is, like you said, the existing blockchains adopt DeFi, really excite their communities, and kind of get those existing communities involved in DeFi. So that's been a really interesting trend to see as well. The second, I think, is kind of, maybe it's a little bit of like a perception bias, but these chains that have been been around for a while, like DOT or Cosmos, and even like Chainlink, right? Like really seeing them kind of mature in their use case because there have been other developments in DeFi, right? Like Chainlink, right? Really important as a decentralized Oracle network. On its own, it's just a cool chain. It's like cool, concept. But now that you have all these other applications, now Chainlink is like this really foundational, like infrastructural project in DeFi, right? And I think you see the same thing with like DOT and Cosmos, where, on their own, it's like, okay, like, do we really need it? Like, do we really need these other chains? And then you see kind of the boom on Ethereum gas fees skyrocketing, transactions taking a long time, and you're like, okay, maybe these chains, like maybe Solana, you're seeing these new kind of emerging needs for these chains. So I think that trend has been something that's been interesting to see.
Yeah, and another trend too is just seeing a lot of more wrapped tokens as well too,
Yeah.
to try to make it interoperable or utilized. So I think that it does. Let's say like Bitcoin is slow to utilize. A little bit faster would be obviously the wrapped Bitcoin, for example. It allows for a little bit more fast utility for Bitcoin in that way, and it still represents and acts like coin. So I think that what I'm seeing, especially with some of these new emerging projects and chains, is that if they can't work with a particular token or project easily, they're building these kind of like quick, easy, like wrap tokens to then allow people to enter and leave pretty easily from one system to another. If they don't have like an open bridge that's out there, they just kind of create like a their own wrap token or wrap Bitcoin, wrap Ether to allow them to want to take their Ether into their platform and transact in its own way too. But I think again, like the only problem is again, like if we see that Ethereum has the largest development community as is, and there still hasn't been like the killer DeFi dApps that's out there, these other developer communities are much more smaller, and so they just don't have as much of the infrastructure in place to build like all the different components that like all the different DeFi projects that like Compound, Ren, Wrap Bitcoin, etc.
Yeah.
That's helping the I think that it's been helping as a good foundation for those DeFi projects to build off of. And if those protocols and platforms are just playing catch up now, they're going to have to either try to get those like projects to come into their network, convince them, and that's going to take time. And then if not, they have to develop their own. Then that's going to be an even greater challenge. It's going to probably take a couple more years if they just want to replicate like a Neo compound or like a Zilliqa compound or like their own, their own take on it. But I think that those projects are going to want to be multi-chain as well too. So it's just going to take time, and we're not there yet.
Yeah, although I will say, like, it has been pretty fascinating to see how fast the space has grown. You had talked earlier about forks and kind of like copycats or people kind of replicating these concepts and protocols and tokens. I feel like we can't move on without talking about Yearn, right? I feel like I've honestly lost count of how many Yearn forks there are. But I think that obviously you see like Bitcoin forks and kind of, they're not that common, right? Except now you see 1 million or so, it seems, for Yearn. So talk to me a bit about what Yearn Finance's role is in the DeFi space, and then what you think will happen. Like, do you think we'll see kind of more forks? Like, will we see consolidation? What's your kind of 2 cents there?
So Yearn has, they did a lot of really interesting things, especially trying to kind of build or provide these suite of different DeFi products through like their vaults. They're looking at like Yearn Credit, Yearn Earn, I guess. There's just so many different tools that I think that they've helped kind of like get people to start thinking of all the different ways that you can experiment in DeFi to produce or generate an APR or APY to liquidity providers. And, they also brought in the case where they, it overpassed in terms of Bitcoin value by just having such a short supply. And so it depends on like when you see the forks, right? The people who are forking it, like YFI, I guess YFI2 or Yearn Money, or I forgot the name of it, but DeFi Money. It's just a copycat of liking their model and seeing how the token price and what a low would look like. And we're starting to see a lot of other flavors of that too come out. Another one's like core vault as well, where the core vault has even less supply, and that still helped the price kind of go up as well, while having kind of like a vault and vault burning mechanism in it as well too. And so like I think that what we're going to continue seeing is that as long as somebody comes out with an interesting model or incentivization structure, and it's successful in terms of a launch or a volume and interest and token price potentially, then people are going to want to just like copycat and fork because it's super easy to do now. And again, like the people that are in the space are just kind of like chasing kind of like these quick gains or quick win gains. They're just going to want to wait till it drops on a decentralized exchange on day one, or they want to be the early yield farmer so that they can get a ton of coins, and when the price moves, they're just going to dump it essentially too. So I think that forks are going to continue to happen now because there is a lot more there's a lot more like volatility and price action that's been going through all these like new DeFi tokens. And you know, even if in a boring market, as long as there's just one spike and one gain, it's just going to continue. There's always going to be people that want to chase those type of projects, despite whatever the project is at all. Even if the market is bear, as long as there's one like green candle that's out there, people are going to be motivated to try to find the next one. And you never know in crypto. There's always something that happens every single week that's brand new, and people were having that FOMO and they want to be the first in this DeFi project or DeFi token space. So as long as we keep seeing that, we're going to continue seeing a lot of forks. And unfortunately too, what I'm seeing in terms of a trend is that there's a lot of past ICOs that didn't do well. And I don't really need to call them out by name, but there's been like projects that you probably didn't hear of until like 2017, only during the ICO phase. They didn't do well with their token, and now they want to just revitalize their own token with a DeFi spin. Whether they do a token swap, it's up to them, but I'm seeing that happen. They're like, oh, our token didn't do well. Well, here's the next wave. We didn't get a lot of user acquisition. We didn't have a lot of opportunity for growth and use case for our platform initially. Well, how can we jumpstart our brand? Because DeFi is so hot right now, it can bring early adopters, jumpstart a Telegram, Twitter, etc. Let's add DeFi into our project, or let's do a DeFi spin onto it. So we have that bucket of people. Then you have another bucket of just blockchain developers. There might be anonymous, and they might be very large developer groups in all around the world that are just constantly reforking tokens, coming up with their own branding, and maybe just have like one minor unique value spin. And we're seeing those come out as like pump and dump scams, or people getting get the rug pulled underneath them from these products. And they're doing it very formulaic now, which is concerning, but it is a thing that have happened, and I'm seeing there are a lot of different groups that are doing it, and that's why we're constantly seeing a lot of these forks and these DeFi tokens happening. And it's unfortunate, but that's been a constant growing trend. And that also happened in the ICO phase, but now it's actually easier to deploy because you could just get launched on the decentralized exchanges for quick and easy swap and potentially be more liquid as well.
But your point on kind of the rate at which these DeFi tokens pop up, admittedly, like it's hard to keep up with, right? You know, it's not like in the past where you know the teams who are developing, you're monitoring them, you're waiting for mainnet, you're waiting for a certain like token roadmap milestones to hit. It's not like that anymore, right? You're constantly just like going through communities, looking on Twitter, like seeing, kind of trying to keep track of like all this development. Either it's new tokens being launched or an existing asset you had your eye on that's now just different, right? So it has definitely been like it's been like a very long sprint, which I feel like is tough.
Yeah, and again, we're getting like very professional. I'd say just straight up professional scammers that they have the formula down, but like this is even easier. Like they did maybe launch scam ICO tokens, but now it's like even easier because people are again trying to chase and just wanting to speculate on these projects. And it's okay now to run an anonymous project. It's okay to do no. Sometimes they'll run with unaudited code too. So just
Yeah.
and we've seen all the dangers of that, and people are still okay to invest and speculate on these projects, which is really crazy. So like the normal like standard barrier for like even back some sort of discretion with like the that some investors and traders out there, it's been thrown out the door. And it's almost normalized now to be a victim of a DeFi scam and just write it off as a loss and you just continue on. Like I've known like so many people that have got wrecked by these DeFi projects, and they just take that into account as that being part of DeFi, which
Yikes.
is terrible, but it's unfortunate. And they're still continuing on to chase these newest projects every single day. So it's crazy.
Yeah, well, that's where I would say kind of, I feel like the whole conversation around like centralized exchange or centralized exchanges and DeFi is something that, we can't really escape. But I do think that, internally, like my team, our compliance teams, our BD teams, our marketing teams, we take this kind of responsibility as like a centralized entity, more like a centralized exchange, like very seriously, right? And I know sometimes people in the DeFi community are frustrated with us because, we're not moving as quickly as they want. But at the same time, it takes time to review kind of these assets that we want to partner with. Especially for exactly for the reason that you brought up, which is, we have a responsibility to our users, to our platform, and, to the broader crypto ecosystem that as an established exchange, we want to support and follow new development, but we're not trying to just like latch on to the next trend. And so I think for us, just internally, it's been like both a moment of reflection, but also kind of, like strategic thinking on, okay, how do we move forward in a socially responsible way? So it's been interesting. So I know we've talked a lot about kind of some of the hazards of being in DeFi. I think on the one hand, I feel like crypto in general is kind of risky, or you really have to do your own research. But I do think a lot of it has to do with the pace of development and innovation in the space. So I'd love to get your perspective on what DeFi innovations you think will be the longest lasting contribution, both to DeFi in general, DeFi specifically, but extend it out to crypto, right? Are there things that are happening within the Yearn ecosystem, or just DeFi lending, or kind of these like yield aggregation models, what have you, that you think will A, push the DeFi space forward, but B, kind of seep into crypto in general, right? What are some lasting implications of DeFi?
So for me, like I've worked both inside of the blockchain and crypto industry, then outside in pure fintech. And, I'd say that fintech is still leaps ahead of crypto in the crypto market in terms of size, funding, and actual real in terms of utility, in terms of how many users they are after. They don't necessarily have to be the best system. They just need to be better than the old financial systems that's been out there. And some of those models are just creating a better user experience. And that's it. If you look at Venmo, is it really any different than just sending money through PayPal? No, but they made the experience like super, super easy. And it doesn't really make any profit initially, but they have a lot of data from those transactions, and they provided real utility and user experiences to the everyday user. And I've always said this with both like crypto and it's not just like DeFi specifically. We're not even close to that yet. But what DeFi has allowed us to do is to create these interesting models with potentially with like what Yearn credit or these other new alternative credit systems and loans and microloans and just like even self-banking options to give you these higher yields in APY. If we could kind of use that as a competitive advantage towards like the existing systems, just like how we're trying to beat MasterCard and Visa in terms of like lowering the transaction fees, which we're not there yet either.
We'll get there. We'll get there.
I think that, yeah, we'll get there. I think that should be the goal is we need to really provide a competitive edge, but not only that, we need to have the user experience match at the baseline what these other like fintech startups and fintech companies, pure fintech companies are doing, and bridging the gateways to have people move their money in a even like a hybrid way, because I feel that full decentralizations and full DeFi is, again, like if there's not enough regulatory, there's not clarity on the regulatory side, or then people that are managing all the assets and monies, or even other banks will not want to come onto the platform. And so there should be some sort of like bridge across, or how can we get more money from the fiat world and real world into kind of the crypto and digital in the DeFi space as well too. So I think that if we can take a look at the cool, interesting DeFi models and try to provide these higher rates, then we can build a kind of like a fintech product hybrid. And I think we're starting to see that there are fintech veterans that are doing some sort of blend with crypto and DeFi to then produce a higher interest rate than your traditional checking and savings, your traditional savings right now. And they don't have to beat the rates that much to be the better rate.
Yeah.
I mean, if you look at it, it's like less than like 1%, right?
Right.
Even if they like even if behind the scenes they're keeping away like all the rest for profits, but they still provide that little bit competitive advantage, but the user experience is there. Then I think that that's like the next bridge for bridging the gap between DeFi, crypto, and like the fintech space. And I don't know if it's working with a big organization like Square and Cash that are slowly getting there. And it depends on your perspective. Do you see it that fintech is bridging the gaps between like the old financial world with like the newer millennial type of finance? And then eventually they're going to get into crypto, or do you want to go full crypto, but it's very niche and they don't have the user acquisition, the user experience isn't there, the transaction fee is super high. Currently kind of like bridge the gaps in between, and I still think that we haven't fully answered that. And I don't think that the only way for us to get to unlock get to the next first like trillion dollars in terms of market cap is to create those gateways. And I think that we are seeing that being built in place with the stable coins, kind of laying that foundations. We have decentralized wallets now, which are building more infrastructure to allow people to like bank themselves if they wanted to. Then you have these alternative lending or DeFi lending models that are giving great yields. And how can we then convince the more traditional finance and traditional and mainstream user to want to enter? That's still kind of like TBD.
Yeah.
And I think that nobody has solved it yet, and I think we need to build a hybrid model, even if it's just like an intermediary for mainstream people, like with what Coinbase just fiat to crypto as a gateway.
You're absolutely right in terms of the gateway, right? We've always seen ourselves as like a bridge or a gateway, or even a connection between crypto and the various other ecosystems that require kind of interaction, right? So we first started as a fiat to crypto exchange, especially specifically because kind of that mainstream adoption. We identified that as something that's absolutely necessary to crypto kind of growing as an alternative financial system. And I think even with DeFi, we have the same mentality, right? We're looking to provide, a gateway for, either existing native crypto users or with mainstream. And I think we're really well positioned to do that, just because of kind of the existing product offerings that we have. Speaking about being a gateway, right? Obviously, not veering into investment advice. I feel like I need to say this, but not as investment advice. But how do you get into DeFi if you're newer to crypto? What would your recommendations or suggestions be?
Yeah. Well, I mean, I still think that DeFi is still super hard to kind of get there and even manage. I've been using tools to kind of like manage all my like pools and farming wallets that's out there using a tool called Zapper, Zapper.fi. They just kind of like plug into all your like DeFi products that's out there. But if you want to learn, the way that I learned personally is just taking like 10, 15, $20, probably a little bit more because your transaction fee will probably be like half of that potentially.
Yeah.
Actually, yeah, your transaction, the amount of moves you need to do will probably cost more than $20, depending on what you're trying to do as well. But I always, before I even like try to get into space and go big, I was just experimenting and understanding that this, I'm going to be spending cash to learn, or spending crypto to learn this. I just started experimenting with what is farming. So I got involved with the sushi token or these other tokens as well. How do I swap those trades? And then I just started like just watching YouTube videos on how to do it, and those tutorials to then kind of get my feet wet and just walking through the process and just doing it yourself. I think you'll kind of see the different layers of it and the different hoops that you have to run to just transact and do stuff in DeFi, which I think is the biggest barrier still, is that it needs to kind of like automatically happen behind the scenes, and it's still not there yet. And I think that once we get to like a layer 2 or like Ethereum 2 upgrade or these other chains come in with no fees or lesser fees and faster transactions, I think that we'll have some very interesting use cases on that front in terms of the user experience.
Absolutely.
But yeah, I'd say like tutorials, open up a MetaMask wallet, as that's like the most commonly used, load up with ETH, and just try it, just experiment and try it yourself.
Yeah, great. I think that's really great advice, right? I think that's the way I got into DeFi as well. Experiment, try it yourself. Start with small amounts maybe, but it might need to be a little bit bigger just because of the transaction fees.
Yeah, definitely.
So yeah, great. Well, I really appreciate the time you took to talk with us today. For viewers or people who want to hear more about what you have to say about DeFi and crypto, where can they find you?
You can find me on Twitter. Name is Justin Wu, W-U. My handle is Hackapreneur, like hackathon, and entrepreneur at the very end, Hackapreneur. And I just shared my thoughts on like community growth and kind of like where is more so like on the business side of crypto and blockchain. I'm not really talking about the token project itself because I'm just very involved with like working and interfacing with a lot of community members and projects out there. I just share more like a business perspective of what's been going on in this space. So feel free to reach out, connect with me, or find me on LinkedIn as well.
Yeah, everyone please do. And I think if we've seen anything, or if there's one kind of cemented fact from DeFi, it is that it is a community-driven project or a community-driven ecosystem. So, I really love your takes and kind of your analysis on that. So, for those of you who really want to understand what DeFi is or kind of the ethos behind DeFi, I'd say, Justin Wu, you should follow him and kind of get his take. For more info on what we're doing, what OKCoin is doing in DeFi, you can find us at our blog.okcoin.com, and on Twitter at OKCoin. Thanks so much, Justin.
Awesome. Thank you for having me.